Bismillahirrahmanirrahim. Assalamu alaikum. Welcome back to Small Talk. Boy, oh boy, we need to talk about so many things, from the big, beautiful bill to Elon Musk starting a new political party, Trump making a comment on his political party. And there's lots of bickering. And then also, we need to talk about what the Fed is going to do about the rate cuts. All that in this video. Let's move on quick. I've taken some notes. I'm going to look at my notes. I wanted to record this video on Friday, but I had to go away out of town, so I couldn't do it. But I wanted to do it tonight before I go to sleep, so you guys are ready for Monday morning. So I'm going to start with the big beautiful bill. Big beautiful bill has been passed, that Trump has been presenting and Elon Musk has been commenting on. What is inside of the big beautiful bill, and what changes has been made in the past few days? This is a deficit spending bill. It will add to the debt. CBO says it will add up to $3.2 trillion. Cato says it will cost about over $6 trillion. Tax Foundation says it's going to grow GDP by over 1.2% on top of what GDP is going to be the next year. Everyone has their own opinion, obviously, depending on whether it's going to be a good or bad, depending on what side of the political party you are. No matter how we look at it, basically the big beautiful bill is that we're taking money we're taking on debts to borrow from the future to give it to the now and boost the economy. So you can do the math whether it's good or it's bad. It's obviously pretty obvious that this big beautiful big is going to have much bigger problems for the country. At least that's what I think. So I'm going to go over some of the details, the few things that I have gone through in the bill. It's obviously over 900 pages long bill. I'm sure I have missed lots of things, but I wanted to give like a ballpark overview and a brief summary of what to expect in this bill going forward. Number one, it has a very interesting clause in it, so to speak, or one interesting point about gambling. So if you are a professional gambler, you can write off 100% losses against your winnings. It includes your travel expenses and business expenses against your gains. So you basically, if you have won some money and you have expenses, and you have to be professional gamblers, obviously, which means if you have your employees traveling and you had your boarding, flights, hotel, etc., and those exceed your gains, you can write those expenses off against your winning and your gains. Number two, charitable giving has increased. If you're doing standard deductions, there is a limit. For itemized deductions, there is a 0.5% floor. It is 1% floor now, but they're reducing it to 0.5%. So instead of doing $600 deductions, you will take up to $1,000 in tax write-off. Right now, you can write off up to $600 in charitable deductions, but now you can write off up to $1,000, and for a couple, it's up to $2,000. So, for example, if you have, let's say, an old Apple iPhone, and you just want to write that off, you can just go ahead and drop it off at the, give it to somebody, to a charitable institute. You can write off, and let's say you donated 3 of them, you have 3 family members, they all need to upgrade their phones. So instead of you selling them on maybe Facebook Marketplace or eBay or whatever and take that money, you can just go ahead, donate that, and you can write off up to $2,000 in your tax, and you can get the tax benefit. So it's kind of pretty much the same thing, that you are saving money in your taxes versus just going through the hassle of selling your old phone and then go ahead and upgrading your new one. So they have raised the value up to $2,000. The next thing I want to talk about is car interest deductions. Car interest deduction is also incorporated in this big beautiful bill, and I'm talking about the personal car loan. Mind it, the business car loan is already 100%. The interest is already 100% deductible or written off in your taxes. Car interest loan, we know that we were not able to write those off, but in 2026, you'll be able to write off your personal use car if you're paying interest on it, and the limit is up to $10,000 that you can write off. Just remember that So the car has to be, it has to be a new car that you bought, and has to be a brand new loan starting in 2026. So let's say, for example, we bought a car this year, which we pay interest on, but we cannot write that off in starting 2026. We have to maybe sell this car and buy a new one and start a brand new loan, and then we'll be able to write it off up to $10,000 a year on the car loan. And there's also a like an income cap. So if you're making $100,000 single and $200,000 as a couple, then your deductions go down. It doesn't mean that it completely is gone, but it means that instead of you writing off up to $10,000, you may have a tier. Maybe you can write off only $7,000 or $5,000 depending on how much your income is. So a good example is, for example, Tesla. You'll have to, in Tesla, if you buy a brand new Tesla and you pay 5.5% interest, you'll save up to $600 to $900 per year by writing off those taxes. Remember, Tesla is getting $7,500 green energy EV tax credit, and that tax credit is going to go away in the third quarter, at the end of the third quarter. So the amount of money that you're saving by buying an EV now, by you writing off that up to $10,000, which will give you $600 to $900 in tax benefits, that's only 1/10 of the EV credit that you're receiving now. That is going to have some negative impact on Tesla, of course, because lots of people buy Tesla now because they can write off $7,500 in EV tax credits. But now, with their tax credit going away, the clean energy credit going away, though you can write off up to $10,000 in interest, but the benefit you get is only up to $600 to $900 depending on your interest rate. So that's neat, but it's people, not everybody drives Tesla, and those people who buy regular cars, they'll be benefited from it, and they will be able to write off, because right now, as of today, you can't write off any car interest if you're using it for your personal use. And the other thing that you can do is, like, the write-off that you get up to $10,000 is only for 26, 27, and 28. So if you have more than 3 years loan, then that benefit, you cannot reap the benefit like for the life of the loan. Some people have 5 years loan, some people have 7 years loan on their cars. So you can only write off your loan for the first 3 years, 26, 27, and 28, until the end of the Trump's term, basically. So the benefit, you will not be you won't be able to reap the benefit for the life of the loan, pretty much. Next I want to talk about is Medicaid and SNAP. Medicaid is part of the big beautiful bill. In the bill, it says that no illegal immigrants get Medicaid. Right now, everybody who comes into this country is eligible to get Medicaid. Whether you are an immigrant, whether you are an illegal immigrant, or even sometimes on work visa, you are qualified to get Medicaid if you don't have health care from elsewhere. But with this new bill, if you're not under the age of 14 years old and you are not disabled, then you don't get Medicaid. You have to work at least 80 hours a month, which means you have to work 20 hours a week, so kind of part-time. And you have to be over the age of 65. Then you qualify for Medicaid, and you have to pay $35 copay to get any of the Medicaid services. And that starts in 2026. SNAP benefits, however, change in 2028. They don't change in 2026. So if state has an error rate of less than 6%, then everybody is fine. But if some of the states have error rates of more than 6%, then the federal government is not going to give them extra funds to cover that cost. The state will have to eat that in their budget. The SNAP benefit and Medicaid benefit is a federal program, but then states have their own policies as well. So right now, the federal government covers all the expenses that are caused due to the Medicaid and SNAP benefits. But once this starting 2028, there are changes that not everybody qualifies for Medicaid. If you're under 14, or you have to be disabled, and you have to work 40 hours a week, and you'll be over 65, then you would get it, and you'll pay $35 copay for all the Medicaid services. So that's that. Fed will not cover the SNAP, which means federal government will not cover anything over 6% of the state error rate that they're covering right now. If it's more than 6%, the Fed will not cover it. State will have to kind of absorb that that expense. Okay, and when I say Fed, I don't mean the Federal Reserve, I mean the federal government. There are two different entities. Remember, federal government is blowing the debt money and Federal Reserve is printing money out of the thin air. If you haven't watched my video on banking, currency, and finance, I explain this, what the Federal Reserve does and what is the role of federal government. Federal government, so Federal Reserve prints money out of thin air, and federal government blows that money and spends that money after borrowing it from the Federal Reserve. So it's a fiscal spending bill, whereas Federal Reserve deals with the monetary policy. Does that make sense? So when I say Fed, I don't mean the Federal Reserve, I mean the federal government, because this beautiful, big, beautiful bill is actually a spending bill. It's not the fiscal, the monetary, it has nothing to do with monetary policy or Federal Reserve at all. Next thing I want to talk about that I wrote down some notes about was immigration and security was also part of the big beautiful bill. So immigration and security is a big one. We are including $350 billion for immigration and security, $25 billion for Golden Dome, $45 billion for construction of the border wall, or to complete the construction of border wall, $45 billion for immigration detention facility beds that they're going to build. Trump has also put $1,000 deposit for a child account as a seed money. If a child is born during the Trump term between 2025 and 2028, that child will receive $1,000 into the child's account, and it will grow tax deferred, which means you don't have to pay tax on it immediately. Tax deferred is when you withdraw the money, then you pay the tax. So if you fall into very low income boundary, then $1,000 is nothing. Then you basically don't pay any interest. So it's not. So it's going to be tax deferred. So in order for a child to qualify, both parents need to have Social Security number, which means if you have illegal parents and they don't have Social Security number, then your child does not qualify for this $1,000 of seed money. But if you are legal in this country and you have Social Security number, you could be here for work visa, you could be here on immigration status, or whatever other visas that do offer Social Security number. Then your child is born during this term between 25 to 28. The federal government will automatically deposit $1,000 into the child account. It will grow, and then if you withdraw that money for qualifying purchase, which could be buying the first car for your education, to start a business, or to pay a long-term capital gain tax, for a business, then you only pay the long-term capital gain tax, but you don't pay any penalties. Any purchases that are unqualified purchases, then you not only that you pay tax on it, long-term capital gain tax, but you also pay a 10% penalty, just like when you withdraw money from your IRA or 401k before you turn 59 and a half. Not only that you pay capital gain tax on it, but you also pay 10% penalty. So it's the same rule applies on this. Once the child is turned 18, the funds will be liquidated and tax will be paid quarterly, depending on at the age of 18. When child turns 18, the money will be liquidated automatically and it will be available for the child to withdraw at that point. And then depending on what tax bracket he or she falls into, they'll pay tax according to their tax brackets. Next, I want to talk about the deductions in your income tax filing. So the standard deductions are going up by $750 for everyone, $15,000 for couple with inflation adjustments. It's expected to cost $1.4 trillion. The standard deductions for individuals is $15,000. $31,500 for couple joint filers. and $23,623 for head of the household. 1,500 $15,750 for single individual. Personal exemptions is permanently gone. All right, child tax credit. We know the child tax credit used to be $1,000, but then Trump 1.0, Ivanka Trump, when she was very involved in the politics, she raised the child tax credit from $1,000 to $2,000. But they're boosting it up a little bit more. They're giving about 2.2K tax credit starting 2026. Just a little boost. It's not much, but at least it's better than 1,000 before, when other Democrats were running the country, or even better than $2,000 that we have now. I know Ivanka Trump is not involved now because she's not part of the politics, but during the Trump's first time, she was very involved. I think she was very her energy was drained, and she just couldn't take it anymore, and she gets pretty emotional about it too. So you get a little bit of boost there, 2.2K instead of 2K. So your child tax credit has gone up. 2017 tax rate still continues, and it has not changed much. So tax rate means, let's say you fall into, depending on your income, you fall into 25% tax bracket. It still stays the same if your income is the same. The rates has not been changed this year in this big beautiful bill. Okay, then the next thing I want to talk about is no tax on tips. We know it was a very hot topic when Trump was running his campaign. He talked about there will be no taxes on tip income because, it's not fair to the tip workers. So all the tip workers are able to deduct up to $12,500 of the overtime amount. So let's say your base pay is $100. Let's keep it simple. And your overpay is $150 per hour. So that the $50 extra that you got paid overtime, you can write that off in your deductions. So there's a limit to it. Single individuals can write off only up to $12,500, couples up to $25,000, and employer still has to pay FICA, Social Security, Medicaid, SUDA, FUDA. Basically, all the payroll taxes are paid by the employer. It does phase out though at $150K for single filer and $300,000 as a joint filer for overtime. So yes, you can write off your tips and your overtime, but the limit for single filer is $12,500. For joint filer is $25,000, and there is also like your tax write-off kind of phases away if you're a single filer, if your income reaches $150,000 a year, and if you're a joint filer and your income reaches $300,000, then you don't get to write off your overtime and your tips. Now, talk about seniors. Standard deductions for seniors is $6,000 right now, and it does phase out if the senior's income exceeds $75,000 a year. The big beautiful bill also talks about the rich tax break, which is estate tax. Estate tax is being lifted by $1 to $2 million. So it's $15 million for individual filer, $30 million for joint filers. It's an estate gift tax, and that is going to go up. Number 7 is for businesses, 100% write-off for capital equipment. So let's say you want to buy a car for your business, or you want to buy, I don't know, a helicopter. You can completely write that off in your as your business under your business equipment and machinery, etc. Under the capital. This kind of motivates spending basically for business owners. If you're taking more business deductions than your income, so for example, the first 3 years, usually people show losses in their businesses, and they show that they're not generating as much income, rather they're investing into business. If that's the case, that you are your income is if you're taking more business deductions than your income, then you can carry forward that extra loss that you're taking, and that is made permanent. So for single filer is $262,000 a year. For joint filer is $524,000 a year in loss. Is a loss for a couple that you can write off. And your net operating loss is carried forward. So if your operating loss exceeds that 262K for single and $524,000 for joint filers, you can carry forward to next year, and then you can write that off and get the tax benefit in the years to come. And that's unlimited. So let's say you took $10 million in loss and you file joint as a couple, you can only write off up to 525K. The rest you can keep carrying forward until that loss is completely gone. You can write off every year up to $524,000 until that $10 million is gone. So that's an additional benefit that you get. Green energy and EV tax credit end dates have been announced. For EV tax credit, and it's going to go away at the end of September 30th. So if you want to buy a new EV, it's time to buy between now and before September 30th, because after September 30th, you will not get the $7,500 tax credit that you're getting now. Just a side note, by this credit going away, I think it's going to be a bullish catalyst for Tesla in the short term, because lots of people will want to buy, people who are looking to buy Tesla now, they're going to go ahead and try to rush to buy Tesla before September 30th, especially now that Cybertruck is also part of the tax credit of $7,500. I think this is going to boost the sale in the third quarter for Tesla, and third quarter revenue is going to go up, which is going to be very bullish for Tesla in the short term. However, in the long term, with $7,500 tax credit gone, and we also, I also mentioned that there's going to be a personal car interest loan that you can write off. That's only $600 to $900, which is only 1/10 of this $7,500 tax credit. That is, not enough benefit, so then Tesla is going to lose that unless they announce something big, like for example, a successful robotaxi, or maybe a new Model Q that they were coming up, Elon has announced, or if they come up with the FSD, then Tesla's gonna fly. But after the last quarter of this year, I think Tesla is going to see a little downside movement, and I think that would be a good buy the dip opportunity, because they have enough in the pipeline. But in the long run, I think Tesla's stock will suffer. But at least towards the end, for the rest of this year, I think Tesla stock is going to boost, because this $7,500 tax credit is going away. So people who want to buy Tesla, they will try to buy it before September 30th. Also, the clean energy, the green energy or clean energy, whatever they call it, their tax credit is also going away on December 31st. So if you want to buy solar panels, buy them now, between now and December 31st. If you buy them after December 31st, then your tax credit will go away. And that's also going to help Tesla, because you remember Elon Musk also sells Tesla solar panels. So that is going to boost the revenue, because this, from now until December 31st, lots of people are going to go ahead and buy, who are ready to buy them. They'll buy them before the end of the year, so they can go ahead and get that tax benefit. So this is a big, beautiful bill. I'm sure I have missed lots of stuff in that bill, but I wanted to at least give a little gist of it, like what's included in that bill. And then I'm going to tell you something else that I just read today, that Elon Musk has announced that he's going to start his own political party, and it's called the America's Party. And Trump has called his party ridiculous, and he said this country is designed to run on two parties, so third party is absolutely ridiculous, and he should not be doing this. He also criticized his involvement in SpaceX, in the space. He said it was just conflict of interest, because a person who's very close to him was assigned to to take charge of the state when Elon Musk is fully has lots of stake in the space business, and that's conflict of interest. So since Elon Musk has announced his political party, and he said uh, during the midterm election he's going to unseat all those Republicans lawmakers who have supported this big beautiful spending bill, and he's going to try to save America. He said, what's the point of creating Doge? Doge is the program that he ran for a short period of time, and he tried to cut spending. He said, what was the point of him creating Doge when he's going to add $5 trillion a year in budget deficit, or in loan add to the nation, and he's going to unseat the Republican lawmakers during the midterm election by using his new political party, which is called America's Party. A new ETF fund manager, Azoria's CEO, James Fisherbach, was going to make his Azoria Tesla ETF go public this week, but he has paused it since Elon Musk has announced his political party, and he also encouraged the board members to have a board meeting and ask Elon Musk what his this announcement of him creating a new party, what is how is he going to take care of his Tesla business if he's going to be involved into the politics, and he's taking his political career to the next level, and he wants him to be held accountable, and he's fully and he reiterated his support for Donald Trump. So Azoria CEO was going to announce his Azoria Tesla ETF, which he's going to pause until Elon Musk decides what he wants to do with his political party. So there's too much drama going on between Elon and Trump. Elon is the guy who has spent billions of dollars endorsing Trump's campaign, and he was often seen on the the campaign rallies where Trump was, and he spent lots of time in the White House. And now when he's moving away from Trump, he's going to like totally 180 degree turn that he took to the opposite direction. So these two kids, they need to just get settled. They need to overcome their quarreling and bickering and feud, and they need to resolve their issues so we don't suffer as shareholders, and Tesla stocks don't suffer, and the economy doesn't suffer in their bickering and all that. So Trump also announced that he is going to write about 15 letters to 15 different countries on tariff. At this point, I think the stock market has been brushing everything off. They know that they're just going to keep pushing it forward until a deal is made. I know July 9th is approaching. The tariff deadline is coming, but I think so many people are of the view that they probably will get more time, or they'll just keep pushing can down the road until maybe the Trump's term is over. Just like the first term when he was talking about tariff a lot, and then COVID happened, and then the talk just went away. So I think at this point the stock market has been just brushing everything off, and they know these are just the tactics that Trump is playing. He's going to negotiate eventually, or he's just going to keep extending the time to a few weeks, few months, or few years. But they didn't say a few years. I think that's what they're going to do until his term is over, and then he will just kiss goodbye to the political office. I know he's trying to get approved a third term for himself. Anything. He would just do anything for himself. He is a little kid who needs to grow up. But anyway, that's that. I just wanted to go over the big, beautiful bill, and just wanted to give you an insight of what to expect, and what to expect from the stock market, and what to expect. This is going to add lots of trillions of dollars in budget deficit to the country. I know some people think it's going to save money, but no, it's not going to save money. Knowing what I know about economy, and as much as I've read in my student life, it's just so obvious and so clear that this is going to add more loan to the country. And of course, federal government probably will print more money to bail out the nation, and inflation just keeps going up. All right, please give my video a thumbs up, subscribe to my channel if you haven't already. Until next one, take care. Goodbye.